Hey everyone, welcome to today's video. As we continue on with the series of understanding the basics of finance, today we're going to look at mutual funds. What are they? How do they work? And what are some things we should look at? And then at the end, we'll also look at an example of a mutual fund as well. So let's jump right into things. What is a mutual fund? Well, a mutual fund is an investment vehicle that pools money from many different investors to purchase a diversified portfolio of securities. Now, within this portfolio, you can have stocks, bonds, and other assets. And the pooled nature of the mutual fund allows investors to gain a wide range of investments without needing to buy each one individually. So, how do they work? Well, these mutual funds themselves, they're managed by a professional money manager, like a portfolio manager, who basically allocates the fund's assets and strives to produce growth, meaning capital gains or income for the fund's investors. Ultimately, they have an objective that they're trying to achieve. Now, when you invest into a mutual fund, you're actually purchasing shares which represent a portion of the holdings of the fund. Now, the price of these shares is determined by the fund's net asset value, the NAV, which is calculated at the end of each trading day based on the total value of the fund's underlying securities. Now, this is different from a stock and an ETF, which are traded throughout the day when the markets are open. Now, let's look at the fees on the mutual funds, starting with the expense ratios. Now, the expense ratios are ongoing fees that cover the costs associated with managing the mutual funds. These fees are typically higher than ETFs due to the active management component of the mutual fund. Now, if you're curious about fees and how these expense ratios come into play, check out my other video on fees that explains MERs, the management expense ratio, and advisory fees, and talks a little bit about this as well. Now, some mutual funds may also have a fee known as sales loads, which are paid when you buy a front end load or when you sell a back end load of the mutual fund. Now, not all mutual funds have sales loads. So whenever you're buying one, if you do things yourself or work with an advisor, make sure you check and assess what load charges the mutual fund may have. Then there's some additional fees that you might find as well on mutual funds. Those could be administrative fees, distribution fees, and redemption fees. Again, always read the fund fee structure before you invest into any mutual fund and any investment period. Now we know how a mutual fund works, how it's managed, and the fees associated with these funds. However, what are the different types of funds I can actually buy? The first one is the equity funds, which are invested primarily in stocks and aim for long-term capital growth. These funds tend to be categorized into large cap, mid cap, and small cap funds based on the size of companies that they invest in. Then we have the bond funds. Now, with bond funds, they typically invest in fixed income securities like government and corporate bonds. And these funds, their objective is to provide regular income to the investor and are generally considered less risky than equity funds. Then we have the money market funds. With money market funds, you're investing in short-term, high-quality debt securities that are liquid and preserve your capital while earning a modest return. Then we have the balance funds, and these are typically most popular amongst investors because they're a mix between an equity and a bond portfolio. They provide both growth and income. And ultimately, what they do is they balance the risk and return. Then we also have the index fund. Now, with index funds, what they do is they aim to replicate the performance of a specific market index, like the S&P 500. Now, these index funds themselves are passively managed and typically, with that, have a lower expense ratio. Then we have the sector funds. Now, sector funds are very focused and specific in choosing a sector that they want to follow, such as technology, healthcare, or real estate. And these funds can be more volatile because they're focused on a specific area versus having a balanced or diversified portfolio. So now let's look at an example of a mutual fund, how it works, what's it invested in, and some of the fees. And whenever you're making the decision to buy a mutual fund, you can always go to the fund company's website to do a little bit of research yourself, if you're doing this yourself, to see exactly how the mutual fund is invested and how it works. Okay, perfect. So let's look at the Mackenzie Global Equity Fund. And again, we're looking at this right through the fund company's website. to give us more details. So we can see exactly how it's invested. And you notice with all mutual funds, they'll typically tell you why you should invest into this fund and some of the benefits, which we can see here. Then as we scroll down, we'll be able to see some of the key facts about this fund. Where it's invested. It's a global equity fund. How much money this fund is actually managing. And over here, it shows over $882 million being managed. The index benchmark, and then the risk tolerance. Is it an aggressive fund or is it a low risk fund? And here we can see that this fund is right in the middle as a medium fund. Here are some of the fund risk measures, including the alpha, the beta. And then here we have the management expense ratio and the management fee. So the MER, which encompasses all fees, including the management fee, is 1.05%. So again, when it comes to this is the fee that you're going to be paying for this mutual fund itself. Now, again, as mentioned in my previous video about fees, this is taken off the rate of return of the portfolio. You're not directly being billed for this, but you're going to see your return on your statement less the fee that's already been paid. Then you'll see the net asset value per share, basically the price of the mutual fund and the distributions that are paid. Then as you scroll down, you'll be able to see the portfolio managers that are managing this, and then the end value of the performance. So what an investment would have looked like if you would invest in this mutual fund. And you can play around with this when you do some research yourself. And again, the fund company does provide a lot of information about the mutual fund itself when you're first looking to invest, from the performance to the fees, how it's invested. But one of the other important aspects that we should look at and consider in a mutual fund is one, the performance, how is it done, but also what is within the portfolio. Now, in this case, in the Mackenzie Global Equity Fund, we can see the top major holdings within this fund include Apple, Microsoft, Nvidia, Amazon, Alphabet, Meta Platforms, United Health Group, Procter & Gamble, MasterCard, and Coca-Cola. But those are only the top holdings. And we can see here that within this mutual fund, the total holdings being 178. Meaning that's how many positions are within this ETF that you're getting exposure to. These ones being the top ones. So as mentioned previously, you're actually getting exposure to the markets, investing in actual stocks. But the portfolio manager's job is to manage the positions within this mutual fund based on their objectives to ensure that the value grows for their investors. And then you can go down and see further allocations when it comes to this mutual fund in terms of how it's broken down based on geographies. Here we can see United States, Canada, United Kingdom. And then in terms of the codes and fees, again, mentioning the sales loads that we talked about earlier, front end, they'll give you the series in terms of which fund is associated with the front end or back end. And all that information can be found here through the fund management company's website. Okay, so to wrap this all up, if you're doing this yourself, it's always best to do your research, do your due diligence, and see exactly what you're investing in, especially when it comes to the mutual fund. You'll be able to get a lot of insight looking at the fund management company's website based on the investment you want to invest into. And if you work with an advisor, on the other hand, again, you can always ask them for guidance and always ask them to get some insight onto what specific mutual funds fit your investment objective. Now that brings us to the end of this video. I know it's a lot, but ultimately it comes down to what are your goals? What are you trying to achieve? So if you found this video informative, I do kindly ask that you hit the like and subscribe button down below. It does mean a lot to me, and I hope to make more of these videos for you guys and to build this community with you. So thanks again, and we'll see you guys on the next one. Take care.